Have you ever wondered why two investors can look at the exact same market and walk away with completely different assets? It's because they aren't just investing, they're building a cake. Today, we're breaking down the three-layer cake theory to help you understand your own strategy and navigate today's complex markets. Just a note before we start. This video is for educational purposes only and is not financial advice. All investing involves risk, so always consult a professional before making investment decisions, as we cannot take liability for any financial losses.
Let's get started. Every good cake needs a solid base. In investing, layer one is your store of value. This is where you put your money when your primary goal is just to keep it safe. A perfect base layer protects you from three things: inflation, price drops, and loss or theft. But here's the catch. Some things that look safe might protect you from price drops, but they often fail to protect you from inflation. So while they are a base, they might not be the full protection you think they are.
Layer 2 is all about income. This is the middle of the cake: the dividends from shares, the rent from a property, or the interest from bonds. If you love steady cash flow, this layer gets a generous serving. Interestingly, things like property rent can often act as a natural hedge against rising prices.
Finally, we have layer three, the icing. This is the speculative layer. This isn't about safety or rent, it's about chasing a higher price tag in the future. Think of a tech startup. You aren't getting a dividend today, but you're hoping for a massive sugar-high growth tomorrow. It's higher risk, but it's where the biggest rewards live.
So, what's the lesson here? It's time to look at your portfolio and ask, what does my cake look like? Instead of just seeing stocks or bonds, look at the slices. Is your speculative icing layer too thick? Or is your income layer a bit boring and safe?
Most investments are actually a mix. Take a share in a massive blue chip company. It's a base asset that holds value. It provides income through dividends, and it has the speculative potential for the price to move up or down.
On the flip side, some cakes are missing layers. Gold and crypto usually don't pay an income. Short-term bonds don't really have a speculative icing layer, although that changes if you buy longer-term bonds. We cover this in a different video. Even safe things like fixed annuities can lose value if inflation spikes. Ironically, risky things like property can sometimes be the safest way to protect your buying power because rent tends to rise with inflation. If you're playing with things like call options, be careful. You're essentially using borrowed money to buy only the icing. You don't own the underlying asset and you don't get the income. You only get that top speculative layer. There's nothing wrong with a little speculation, but you need to know if your cake is all icing before the market takes a bite out of you. Remember, the market isn't a single machine. It's a crowd of different people with different goals, which is why prices move so unpredictably. Now, to keep us grounded, I've invited our peer reviewer, Pete, to give us the other side of the story.
Thanks, John. The cake theory is a great visualization, but I have two main concerns. First, we can't actually know what every investor is thinking. There isn't hard data to prove people prioritize these layers the way we've described. Secondly, this model assumes investors are rational. In the real world, people are often uninformed or irrational. Behavioral finance experts like Daniel Kahneman and Amos Tversky prove that human logic often goes out the window during market bubbles or panics. People make risky bets based on excitement, not a balanced cake recipe.
Thanks, Pete. It's always good to remember that humans are the X factor in any model. We've covered a lot today, but this is just one of 30 critical topics every serious investor needs to master. I highly recommend our comprehensive guide on Amazon. It packs the best insights from our first 30 videos into one definitive manual, including exclusive explanations you won't find on this channel. Check the link in the description, and I'll see you in the next two videos where we discuss other topics in this series. Goodbye.